Hi there, it's Mike Farrell with Aspen iBiz coming to you from the mountains of Colorado. When the weather's nice, I like to dress casual and work outside, so I have just stepped outside of my home office up here in the mountains of Colorado to bring you this update. I just had an article published titled, "Consider Forex Trading as a Hedge to the Demise of the US Dollar." So in my update today, I'm going to introduce Forex currency trading as an alternative wealth creating strategy. It's pretty crazy out there in terms of a financial crisis, the new economic landscape that's being built. So we always need to have our eyes and ears open to alternative wealth creating strategies. And I'm going to share with you Forex currency trading as one of those. It can be used as a hedge to the potential demise of the US dollar, and it can offer non-dollar denominated investment opportunities. And I'll illustrate those in just a moment. However, just to be sure we're on the same page, the demise of the US dollar I'm referring to is based on the significant devaluation of the US dollar that is underway as a result of the potential high inflation, the expanding money supply, and the runaway money printing by the Federal Reserve. Now, for a few key pointers about the Forex currency market. It is a $4 trillion market, the largest market on the planet. Larger than commodities, larger than real estate, larger than the stock market. $4 trillion market. As a result of this size, this market is extremely liquid. And what that means, you can easily get into and out of any trades or investments that you have. The second thing, since money never sleeps and business is being conducted somewhere every minute of the global day, this market is open and available to us 24 hours a day. Now, let me introduce those two examples of the hedge that I talked about just a minute ago. So I'm going to use my pen here as an example. Think of this as a teeter-totter. In Forex, the spot Forex, which is the cash currency market, the foreign currencies are traded in a pair. So you have two of them, and just imagine each of them on one end of the teeter-totter here. So let me give the example of the hedge against the US dollar. So let's use as an example like the Euro-US dollar currency pair. So if we had the Euro over here on this side, and we had the US dollar on this side. If the US dollar is being devalued and its value is going down, well, the Euro is going up. So there's an example of making an investment, putting on a trade in the Euro-US dollar currency pair, and as a hedge to the US dollar shrinking, then the Euro goes up, and that's a way to protect yourself against the shrinking demise of the US dollar, shrinking value and the demise of the US dollar. Now, alternatively, the other example that was suggested was in terms of non-dollar denominated assets. So let's think of like the Great British Pound, Japanese yen. So we'd have the Great British Pound over here on this side, and we'd have the Japanese yen over on this side. Now, there's two currencies. Neither of them are US dollars. So you have an opportunity to put on a trade and have an investment in a non-dollar denominated assets. And any one of two things can happen. But since England, its economic affairs is somewhat in a sad state like the US, let's say, for instance, if the Great British Pound was going down, well, in that particular currency pair, if you put on a position and a position where you were actually bearish on the Great British Pound, then your Japanese yen would go up, and if you put that position on that way, then you'd be positive. And there's an example of a non-dollar denominated trading alternative. So if this is of interest to you and you think something that you'd like to explore further, you're probably sitting back and saying, scratching your head saying, where do I begin? Well, there's a lot of junk out there, so be sure you do your homework as you research potential suppliers of training material to help increase your education and literacy, trading platforms that you would use as you were putting on these trades, and potential brokers that you might have an account with. For training, one of the companies I use provides 35 free training lessons on their website. And they want you to paper trade their approach before they will take your money as a subscriber to their trading service. So this provides a very low cost to no cost way for you to get your feet wet and see if this is an alternative that will work for you. Also, I suggest you consider attending a training session. I recently attended one from the company that I mentioned above. The instructor was there in person. He delivered the course live and had a tremendous amount of face-to-face interaction with the students, which is very rare these days, in these days of webinars and online video types of training. Plus, it only cost $50 for the day to attend that one-day seminar. So there's two examples of low cost to no cost ways of increasing your literacy and deciding if this is something that would be of interest to you. The material for this course was presented electronically, served up from the instructor's website in an online format. There was material there to read and study. There were screenshots of trade setups that were available on Flickr so that you could take an exam or look at them and see exactly what a setup would look like. Plus, he had a YouTube channel full of videos from previous courses. All of those you were available to bookmark on his website, and not only did you see them live during the training course, you could go back and have access to them as a refresher sometime in the future to help you better understand and refresh what was going on. The course was organized around 5 key modules. The first module was chart reading. The second one was around support and resistance. The third one was around a parallel and inverse pair analysis. The fourth one was around writing trading plans, and the fifth one was around entry management and verification. Also, there were topics on mindset, building confidence, and determining good times to trade and when the times are not so good to trade. When you get a chance, you can read this overview on my blog, and it points to the article that was just published called "Consider Forex Trading as a Hedge to the Potential Demise of the US Dollar." Also, you could read an article that's called "The State of the Union of the Forex Marketplace," and that was prepared by the instructor of the training class that I just mentioned. And I have a link to his article also in my blog. I trust that you will find all of this very insightful. Until next time, I invite you to meet me on Facebook, follow me on my blog, watch me on my YouTube channel, and join me as I increase my financial literacy and pursue alternative wealth creating strategies. All the URLs have been provided above. And as always, here's to your success.